From that big Fed Beige Book report, Steve, what can you tell us about the American economy?
Little or no change in economic activity in the Beige Book since the prior Beige Book, which noted slowing economic activity. 3 districts reported modest growth. 1 reported a moderate decline. The others were about unchanged. But there was good news on the consumer front, Dominic. Consumers met holiday spending expectations in most districts, exceeded it in 3 districts, and one of those was New York, which was highlighted as having very strong retail sales. As well, several districts noted increased leisure travel, so that's the good news. Nearly all districts, however, reported decline in manufacturing activity, and high interest rates were said to be limiting auto sales as well as real estate deals. On the other side, the prospects of falling rates, according to the sources that were talking to the Federal Reserve, was a source of optimism. Among the risks off the office market, a weakening demand, and the 2024 election cycle were cited as sources of economic uncertainty. The outlook for firms were positive. On the issue of the labor market, 7 districts reported little or no change in employment. Job growth was described as modest to moderate, so you are getting that cooling the Fed has been looking for in the job market. In fact, all districts cite 1 or more signs of a cooling labor market, so that's going to be good news to the Fed. And wage growth was characterized as moderate to modest in 4 of the districts. Half of the districts report a slight or modest increase in prices. 5 said price increases have subsided. That's good news. Interesting comment here. Profit margins were reported under pressure as consumers push back on price increases. And so it looked like some of the retailers out there were having a little trouble, Dominic. And maybe we've seen some of that in some of the earnings reports, some of the guidance that we've gotten. And it's also, by the way, showing up in some of the data that we're looking at, that profit margins are under pressure as consumers balk at some of the high prices out there. Dominic?
Steve, seeing the balance of consumer-oriented data that you've looked at over the course of the last several weeks and maybe even months at this point, is it in your mind a sign that the American consumer is in fact in a state where they are declining right now, or are they going to hold up like they have over the last couple of years since COVID?
I think they're slowing, but I got to say, Dominic, each one of these consumer spending reports comes out and my right eyebrow goes up a notch, and then it goes up another notch. That's curious. I mean, they just keep kind of keeping on. The data shows it's definitely slowed, but it isn't slow. When you look at the NRF Christmas accounting, how the holiday sales went, it's 3.8%. It's exactly back to the number we had in 2019. So you don't have much of a slowing. And one of the things that's going to happen, Dominic, is that the fourth quarter numbers, I'm seeing them go up a little bit in terms of GDP, and that creates a better launching point for consumer spending for the first quarter. So you're going to have that flatter first quarter growth. In any event, we don't seem to be getting growth below potential. Consumer keeps on keeping on and hanging in and doing about potential, even a little bit better than potential growth the last quarter.